Welcome back to Sam AG, where I expose the financial truth that mainstream media refuses to tell you. And if you watched my previous video about China's $5 trillion shock, you know exactly what I'm talking about. China just executed the largest wealth transfer in modern history. But here's what I didn't tell you in that video. Here's the part that Wall Street is desperately trying to hide. American banks are now completely exposed. And I mean catastrophically exposed in ways that could trigger the biggest banking crisis since 2008. What China did wasn't just an attack on the dollar. It was a precision strike designed to expose the fundamental weakness in the US banking system. And once you see what I'm about to show you, you will never look at your bank account the same way again. By the end of this video, you're going to understand exactly how China's move just pulled the mask off American banking fraud. You're going to see which banks are in immediate danger of collapse. And you're going to know what you need to do right now to protect your money before this situation explodes. So if you're new here, welcome to Sam AG. Hit that subscribe button right now because I'm one of the few people actually connecting these dots while everyone else is sleepwalking into disaster. And if you're coming back from my China video, thank you. You're about to see why that story was just the beginning of something much bigger and much more dangerous. How China's move exposed us banks. Let me explain the mechanism of how China's $5 trillion move just destroyed the foundation of American banking. And this is technical, but absolutely critical. So pay close attention. Remember what I told you in my previous video. China dumped approximately $1.2 trillion in US Treasury bonds over the past few months. But here's what most people don't understand about what that actually means for banks. US banks hold massive quantities of Treasury bonds on their balance sheets. Why? Because Treasuries are considered the safest asset. They're supposed to be liquid, meaning you can sell them anytime. They're supposed to hold value. And banking regulations allow banks to treat Treasuries as high-quality reserves. But here's the problem. When China dumps over $1 trillion in Treasuries onto the market, Treasury prices collapse. And when Treasury prices collapse, every bank holding Treasuries suddenly has massive unrealized losses. Let me give you the specific numbers because this is where it gets terrifying. According to FDIC data from Q4 2025, U.S. banks are sitting on approximately $620 billion in unrealized losses on securities held in their portfolios. That's money that evaporates if banks are forced to sell those Treasuries to raise cash. Now connect the dots. China's massive Treasury selling drives prices down. Bank Treasury holdings lose value. Banks now have less actual capital backing their deposits than they claim. This is the exact same setup that killed Silicon Valley Bank in 2023, the exact same mechanism. And here's where it gets worse. China knows exactly what they're doing. This wasn't accidental. This was strategic economic warfare designed to expose the fragility of fractional reserve banking in America. You see, banks operate on a lie. They tell you your money is safe. They show you an account balance, but they don't actually have your money. They've loaned it out. They've invested it in securities that are now underwater. They're operating on the assumption that not everyone will try to withdraw at the same time. China's Treasury dump just revealed that assumption is false. When confidence breaks and people start withdrawing deposits, banks have to sell their Treasury holdings to get cash. But because China crashed Treasury prices, banks realize massive losses when they sell. Those losses eat into capital. Capital ratios fall. Regulators start asking questions. Depositors panic. Bank run begins. This is not theoretical. This is the documented playbook of how banks fail. And China just set the dominoes in motion with surgical precision. Which banks are most exposed right now? Now, let me tell you specifically which banks are in the most danger right now so you know where not to keep your money, because not all banks are equally exposed to this crisis. First, regional banks with heavy commercial real estate exposure. I'm talking about banks like New York Community Bancorp, Valley National Bank, Western Alliance, and dozens of smaller regional institutions. These banks have two massive problems hitting simultaneously. Problem one, they hold significant amounts of Treasuries that just lost value because of China's selling. Problem two, they have massive commercial real estate loan portfolios that are defaulting as office buildings sit empty and property values collapse. When you combine Treasury losses with commercial real estate losses, these banks are facing potential insolvency. Their capital buffers are too thin to absorb both hits at once. And depositors are starting to figure this out. Look at the deposit data. Regional banks have lost over $800 billion in deposits over the past 18 months as money flees to larger institutions or moves out of banks entirely into Treasury bills and money market funds. That deposit flight is accelerating right now. Second, banks with high exposure to uninsured deposits. Remember, FDIC only insures up to $250,000 per depositor per bank. Anything above that is at risk in a bank failure. Silicon Valley Bank failed specifically because 96% of their deposits were uninsured. When tech companies started withdrawing money, SVB couldn't meet the demand without selling treasuries at massive losses. The bank collapsed in 48 hours. Which banks have similar profiles today? First Republic, before it was rescued, had 68% uninsured deposits. Signature Bank was over 90% uninsured. Look at banks serving wealthy clients, tech companies, and businesses. Those are the ones with concentration risk. Third, banks that are heavily reliant on wholesale funding rather than stable deposit bases. Wholesale funding means borrowing money from other financial institutions or capital markets. When confidence breaks, that funding evaporates overnight. Credit Suisse collapsed in 2023 partially because their wholesale funding dried up when confidence disappeared. American banks using similar funding models are vulnerable to the same sudden death scenario. Here's my advice, and this is critical. If you have deposits at a regional bank, especially one with significant commercial real estate exposure in their loan portfolio, verify that your deposits are within FDIC limits. Better yet, consider moving some of that money to one of the systemically important banks that are too big to fail. I'm talking about JP Morgan, Bank of America, Wells Fargo, Citigroup. These banks will absolutely get bailed out by the government in a crisis because their failure would destroy the entire financial system. Your regional bank will not get that treatment. The Treasury market. Crisis. Nobody's talking about. Now let me explain the bigger crisis that China's move just triggered in the Treasury market itself. Because this goes way beyond just bank exposure. This threatens the entire foundation of U.S. government financing. The United States government is currently running deficits exceeding $2 trillion annually. That means the government spends $2 trillion more than it collects in taxes every single year. How do they fund that deficit? By selling Treasury bonds. Who buys those Treasury bonds? Historically, foreign countries, especially China and Japan, have been the largest buyers. They recycle their trade surpluses with America by purchasing treasuries, which keeps U.S. interest rates low and allows the government to keep borrowing cheaply. But China just broke that cycle. They're not buying treasuries anymore. They're selling them aggressively. And when the largest foreign buyer becomes a massive seller, who fills that gap? The Federal Reserve has to step in and buy treasuries to prevent yields from spiking. But when the Fed buys treasuries, they're printing money to do it. That's monetizing the debt. That's inflation. That's dollar debasement. So now the U.S. government faces an impossible situation. They need to sell $2 trillion in new treasuries annually to fund deficits. But China's dumping their existing holdings. Foreign demand is collapsing. The Fed has to print money to buy treasuries. That printing creates inflation, which forces the Fed to raise interest rates to fight inflation. But higher interest rates make the government's debt service even more expensive, requiring even more borrowing. It's a death spiral, and China's $5 trillion move just accelerated it dramatically. Treasury yields are already rising. The 10-year Treasury is back above 4.7% after China's selling pressure hit. If yields go to 5.5 or 6%, the U.S. government's annual interest expense exceeds $1.5 trillion. At that point, interest on the debt becomes the single largest government expense, bigger than Social Security, bigger than Medicare, bigger than defense. When interest costs consume that much of the budget, the government has two options: default on the debt, or print unlimited money to pay the interest, which destroys the dollar through hyperinflation. China understands this math perfectly. They have engineered a scenario where America has no good options. Every path leads to dollar destruction and U.S. economic decline. What this means for your money right now. Let me break down exactly what this banking exposure crisis means for you personally, because this is about your money and your financial survival. First, if you have more than $250,000 at any single bank, you need to immediately diversify that across multiple institutions, or move the excess into Treasury bills purchased directly through Treasury Direct. In a bank failure, anything above FDIC limits could be lost or frozen for months during resolution. Second, if you're banking at a regional institution, you need to research their commercial real estate exposure and their Treasury holdings. This information is public in their quarterly filings. If they have significant CRE loans and large unrealized losses on securities, that's a red flag. Consider moving to a systemically important bank. Third, keep some physical cash outside the banking system. I'm not saying stuff your mattress with money, but having $5,000 to $10,000 in cash at home is prudent insurance. If there's a banking crisis and ATMs stop working or accounts get frozen, physical cash will be critical for daily needs. Fourth, understand that your savings are being quietly destroyed, even if your account balance looks the same. When the Fed prints money to buy treasuries, that creates inflation. When China dumps treasuries and the dollar weakens, that makes imports more expensive. Your purchasing power is declining, even if your nominal dollars stay constant. A savings account earning 1% interest when real inflation is 6% means you're losing 5% purchasing power every year. That's how wealth gets silently confiscated from people who think cash is safe. Fifth, consider moving some wealth into assets that benefit from dollar debasement and banking system instability. Physical gold and silver cannot be printed and have no counterparty risk. When banks fail and currencies collapse, precious metals preserve purchasing power. Real estate, if you can afford it, is a tangible asset. Productive businesses with pricing power can pass inflation costs to customers. Quality stocks and companies with strong balance sheets and international revenue can provide some protection. The worst thing you can do right now is nothing. The worst strategy is assuming your bank is safe, your dollars will hold value, and the system will protect you. China's $5 trillion move just proved that assumption is dangerously wrong. Sam G. Final warning. Let me wrap this up with the brutal truth that you need to understand. In my previous video on this channel, Sam AG, I showed you how China executed a $5 trillion shock by dumping dollar assets and accumulating gold and commodities. That was the attack on the dollar. But what I'm showing you today is the consequence. That attack exposed fundamental weaknesses in the American banking system that cannot be hidden anymore. Banks are sitting on $620 billion in unrealized losses. Regional banks are hemorrhaging deposits. Commercial real estate is imploding. The Treasury market is in crisis, and there's no easy way out. This is not fear-mongering. This is documented reality backed by FDIC data, bank filings, and Treasury market activity. The exposure is real. The risk is immediate, and time to protect yourself is running out. I need you to take action right now. Verify your deposits are protected. Research your bank's exposure. Diversify your holdings. Keep some cash accessible. Move some wealth into hard assets. These aren't optional suggestions anymore. These are survival requirements. If this video opened your eyes to the banking crisis that's unfolding right now, smash that like button so more people see this warning before it's too late. Drop a comment below and tell me which bank you use and whether you're moving your money after watching this. Subscribe to Sam AG if you haven't already, because I'm going to keep tracking this crisis as it develops. When the next bank fails, when Treasury yields spike further, when the Fed is forced into emergency actions, you'll hear about it here first, with analysis that actually explains what it means for you. Share this video with your family and friends, because most people have no idea their money is at risk. They trust their bank, they trust the system. That trust is about to be shattered. China made their move. US banks are exposed. The crisis is here. The only question is whether you'll be ready when it hits. This is Sam AG. Stay vigilant, stay informed, and protect what's yours.